Hi everyone, welcome back to the podcast. I have Arun with me. Arun is very keen to join me on the podcast, and I thought, okay, I'll give him this opportunity and let him dive in to the fun of doing podcast on Be Rich. So be kind to him. It's his first venture into podcasting. He's rather nervous because he's not done this before. He's never put himself out there. So be kind. If you have anything to beat me, but be kind to my boys, I always say. So Arun, what do you have? What questions do you have on your mind? Is it finance related?
Yes, sir. It's particularly about FIIs.
Okay.
We see a lot of news about FIIs that they will be investing thousands of crores in a month and they will be taking thousands of crores in a month. So that impacts a lot in our markets. So my question is, who are FIIs and what impacts they create in our market?
FIIs are anybody who's sitting outside India who wants to invest into India. Okay.
Yes, sir.
So there can be Indians also sitting outside India who may want to invest into India. So anyone who brings foreign currency and brings it into India and starts investing into India are into FIIs, and they have to follow certain rules. So this happened way back in the 1990s when the Indian economy was opened up. Before that, it was very hard to invest into India. There was very strict rules. So the Indian country was opened up in the 1990s, and foreigners were allowed to bring money inside. Indian companies are allowed to take loans from outside. So all that opened up, and this free flow of cash happened. The main reason why FIIs bring money into India is the same reason you put money anywhere. Is to make more money. You want your money to grow. But the problem in FII is there's a dollar-rupee change happening because when you invest in India, you're not investing as dollars. It changes into rupees and it's invested as rupees. When you sell, you get back rupees and you have to convert it back to dollars and take it back out. So when you brought the money into India, let's say it was 70 rupees you got for $1. But when it's time to take out, it might have gone to 80 rupees a dollar. I'm talking about long term. Okay, it's not going to change overnight. So if you look at it that way, you have to not only make money, okay, whatever you invested in long term. This is why the FIIs don't invest long term. Whatever you put in long term, it has to have grown 30%. So much so that when you pull the money out, in the conversion, what you have lost because you left the money for so long, you still make a profit of that beats inflation in your country. That is very difficult. So what FIIs do, they'll drop money and they'll see how the rupee and dollar is moving. They'll see macro conditions and they'll pull the money out. Okay. Before, what was happening was in US you could get money for zero, meaning
Zero interest rate.
rate. You borrow $100, you only have to return $100. Right? This is also true in Japan a long time, where you could borrow money, and a lot of Japanese people borrowed money and they invested outside Japan. So the same way, a lot of foreigners are bringing money into India because you got zero interest. You have to pay zero interest. So even if you bring it into India and after all the conversion, everything, you make 2-3%, it's free money. Okay. So if you are eligible to take a loan in the US, you could borrow money for nothing, invest it here, make money 3-4% and return the money back to the US government, and you just make money for free.
So that extra amount is there.
It's free. But now what's happened is that has changed in the US because the Fed has been raising interest rates. When Fed is raising interest rate, your borrowing cost is going up. So as your borrowing cost goes up, your spread in making money in India comes down. Or no, this is not only in India. This is true for any emerging market. There's China, Taiwan, anywhere else where money is going, Philippines, wherever money is going. These are called emerging markets. People will be pulling money out and taking it back to US because interest rates are going up. That means you're going to make more money. Let's say you're putting money in India, making 3-4%. Now the savings account in US was offering 0 or 1%, 2%. They're offering very low interest rate. Now they're offering much higher interest rates. So you can just put it in the treasury bill over there in the US and make money.
So that will give more returns.
Yeah, more returns. So people are pulling money out of India. And the other reason why FIIs bring money into India is also comparatively now the world global economy is changing. China is becoming hostile with US is becoming hostile, and China is going through economic hardship right now. So their stock market is tanking, and their government is not a democratic government. So the government decides to do something. You as an investor, you can't do anything about it. There's no rule of law. Whatever the government decides, it can do. It's a communist country. So all those fears are playing in. So if you look at where can I put my money now, India is a good option because the Indian government is stable. For an investor, what you look for is stability. You don't really care about who's ruling. Okay, you don't care if it's a dictator or if it's a democracy or anything. As long as it's stable and the rule of law works and things are transparent, you have access to your money, you don't mind investing.
Yes, sir.
So this is the main reason why FIIs put in money and pull out money. And because of the sheer exchange, right? For every $100, he's going to get, let's say, times 80. Okay, that's 8,000 rupees. For you, 8,000 rupees is a lot. For him, $100 is nothing.
Yes.
You understand? So
Yes.
now you multiply that $1 million. Okay, $1 million is what, 10 lakhs?
Yes.
10 lakhs.
Yeah.
$10 lakh. But when you multiply that by 80, that becomes
8 crores.
8 crores.
8.5 crores.
Yeah. So it's nothing. For you, 8 crores. For him,
that's just
it's like one pocket change. He borrows that money at zero interest and he drops it here. So you can imagine so many people are dropping in money in India. So it's growing. And that too, now everywhere, people like your Morgan Stanley and everyone's been playing up India. Saying there's lots of opportunity in India, lots of opportunity in India. So a lot of people have been dumping money in India.
Okay.
That's why if you see a lot of our companies are completely overvalued. Like our Titan, if you see, it's completely overvalued. Doesn't matter how much business Titan does. It does not deserve the valuation.
The IP ratio.
Yeah. Right. That means the earnings don't match what people are willing to pay for it because they all want good companies. There's only a few good companies.
Okay.
Right? So all that money is chasing those few good companies. So that's why all those companies are overvalued. Yes, market will correct. What will cause the market to correct and all these FIIs to pull out their money at one shot, we do not know. We all thought, that's why there's something known as numb market, as I spoke about. Numb market means not having any reaction. It's like when you want to have an operation, they give you anesthesia, no? Otherwise, they give you a local anesthesia. Like your dentist, to pull out your tooth, he'll put some cream and you can't feel anything. So same way, the market is very numb. There's conflict happening on continental Europe. There's a war going on.
Between Russia and Europe.
Market doesn't care. There's a war going on in the Middle East. Okay.
The Gulf problem and
they don't care about that. The Red Sea, right? There's freight problem there. Ships are not moving freely. The Suez Canal has a problem. They don't care about that. Okay. Japanese economy today, 2 quarters, no growth, recession. Japanese economy is entering recession, they're saying. They don't care. Stock market in Japan is still going up. Right? US. Donald Trump election year, their economy. Fed is not going to lower interest rate. Doesn't care. So you're wondering, sir, you're saying all this. These are all negative news. Market is supposed to correct. Why is it not correcting? Correct. You'll keep saying, all this you're saying should cause market to crash.
Yes.
In history, if you look at it, it's all crashed. Why is it not crashed? Because for the last more than from 2007, we've been giving lots of free cash. And pandemic happened, we gave even more free cash. All that free cash has to get drained out, no?
Yes, sir.
So after that, when it drains out, you can put
extra amount.
Then only the market will correct. There's so much of free cash floating around. We do not know where all the free cash is sitting. It's very hard. It's like pouring 1 cup of water into the ocean. Then I tell you, Arun, you get me? No, you get me the same cup of water back out. You look at me and think I'm crazy.
Somewhere.
Yeah. You can only get me 1 cup of water. That will be seawater. I tell you, bring me that fresh water back inside the cup and do in reverse. You'll be like, I can't do it.
Okay.
That is what you guys are asking me. When you're saying, when is the market going to crash? I do not know, man. You pour so many buckets of water.
Our part is just to put our cup of water into the ocean.
Correct.
Let's see if it moves or not.
So, as an investor, Arun, what you should focus on is, what is your goal? Right? And that is the hardest thing for you.
Yes, sir.
Right? The hardest thing for you to sit down and really think, where do I want to be 20 years from now? When you do not know where you want to be today evening, where you want to eat for dinner, it's a very hard thing to think what you want to do 20 years from now. But my advice to you is that first sit and figure out what is it that's your purpose. What do you want to do with your life? What do you want to do? Then you'll know where you want to be 20 years from now.
Okay.
Then when you know where you want to be 20 years from now, then you'll be able to work back and say, okay, I need so much money. Everybody needs money.
So that amount will work and reach there.
Correct. So you need to work backwards. First, you need to know what your purpose in life is. I know it sounds very philosophical, but it's not. This is very practical. Right? So it's like me saying, if you know you need to go to your hometown, wherever that is, you'll know how much money you need.
So similarly for our goals,
correct,
we have to decide this much amount is needed.
Yeah. Which you guys don't want to do. You guys all just want to say, okay, where to invest? I mean, why invest? What if you don't need to invest? Let's say your father has given you so much of money.
So basic purpose of investing is to generate that extra amount.
If you need it. You should only generate what you need. You look at all these guys who have thousands of crores. You're also thinking, no, what are they doing with so much money?
Yes, sir.
The same thing applies to you. There is someone on this world who look at you, Arun, and think where you are right now and think, why is Arun needing so much? He already has so much.
Okay.
So just perception. But you need to figure out where you want to go. Then find out how much it's going to cost you to get there.
Yes.
Then do a roadmap.
Okay.
Then once you have a roadmap, then you can say, okay, I need to invest so much. I need this kind of returns. I need at least, sir, I need 12% to 11% every year compounding. It will get me to my goal 20 years from now.
Okay.
Then I can tell you, okay, how much do you need to invest monthly? Where all should you put your investment? I can break it up and tell you. And then you stay focused on that and not worry about what all is happening around the world. Why FI is pulling in and out. Doesn't matter to you.
Because every time FIIs invest and take out the money, it creates a lot of impact in the market. So we tend to move by that.
Yes, but also at the same time, they'll say today FI has pulled out so much of money, right? But then the market doesn't move. Why? Because then they'll say domestic investors filled in, bought everything. Then you'll also be left thinking, sir, you said today correction will happen. FIs are pulling out money. Interest rates in the US has gone up. We're going to expect a market crash. Dow crashed yesterday. Today we expect Nifty to crash. Nifty opens, tapak, it drops, and immediately 5 seconds later it's gone back. You're like, sir, what is this? It didn't even stay crashed.
Because the news and media will hype that so much.
It doesn't matter to you, Arun.
We are long-term investors.
You pick the companies you want to invest. Okay, whatever companies, ITC, Tata Motors, whatever companies you want. You put Tiffin Coffee. You have a map. You keep doing your work.
Yes, sir.
It's like you wondering what is happening in the next house. Who cares?
Okay.
But that's hard because your mind won't let you do that. Your mind is constantly comparing.
We tend to see what is near us and rather than what is far ahead.
Yes, that's true, no?
Yes,
sir. Hey, you guys, be patient. Huh? This is Arun's first time, so I tend to talk a lot. So I encourage him and coax him into talking more. Don't immediately think like, sir, you're bullying him and you're talking a lot. It's not that. He's feeling rather timid and shy because this is his first time. Understandably, I would be the same. And I'm just coaxing and trying to encourage him to talk and not pay attention to the camera and that he's being recorded. So be kind.
Sir, and one more question is, we see shareholding of each and every company. So FIIs have a large portion invested in a particular company. So why are they doing that? And particularly if FIIs have a large portion, that means it's a good company.
No, it doesn't mean that.
So why is that FIIs have a major portion in almost all companies?
Not in all companies. FIIs also don't invest. Majority of the people who are FIIs are people who have a lot of money to start with. Okay, don't imagine someone in US who's a plumber, who's making little money and has even less money to invest. He's investing in India. He's not. The guy who's investing in India has got so much of money. He's taking a little bit of that money and he's playing with it. And he's not directly investing. He gives it to one lallu. That lallu will give it to a kullu. And that will get passed on. So one fund manager who's sitting in somewhere in Singapore, he'll take calls. Okay? He'll say, okay, put so much in ITC. He'll say, put so much there. Okay? And he's only worried about a spread. But you will see some FIIs who have invested in some unknown small company. You go see some small cap. And there'll be like 5%, 3% FI holding. You'll be wondering why is there. There is also like ICICI Bank, what we spoke about, there's also corruption. That fund manager is controlling millions of dollars. Right? Some friend of his will be calling and saying, Macha, I need a little bit you buy it. I need you to push that share for me.
For the short term.
For 6 months, you just keep some money parked there. So he'll buy 5% and keep. Or that guy would have offered it to him at a certain price, one block deal. Or I got it, and I would have been sitting on it. Then he'll exit. These kind of plays happen. So as an investor, it's not transparent. You really do not know why FII is buying and which FII is buying. You can find out, but even then, it'll be one fund manager somewhere to exactly know who's the one who's doing. That'll be like investigation journalist. How is it going to help you as an investor? But to use a thumb rule saying if a stock has a lot of FIIs invested in it, it's a good company, is not true, right? But what is true is if let's say FII has 12%, 15% holding in a company, there's a good chance when the stock market corrects, when FIIs dump everything, that company which you're looking at, the correct price will correct. Like what's happening with the ITC and British American Tobacco, they're holding 26, 29%. So when they let go, even 1-2% they'll drop, the shares they drop in the market is going to have a huge impact in the share price.
Okay.
So that is true. So that way it's useful information. You can look at the holdings in a company, see, okay, FIIs are holding this much.
Okay.
So when the market corrects, when FIIs are exiting, maybe when they sell, when panic selling they do, I like this company, I can look at the price at that time because FIIs will be exiting. Right? That you can do. But to think that it's a good company because FIIs are sitting there is not that's not an investing strategy.
Because we believe that if FIIs invest in that company, that is a good company.
No.
Okay.
FIIs are human beings just like you and me. They also make stupid moves.
Okay. Yes, sir.
FIIs also lost money. In Anand Ambani's company, FIIs lost money.
Okay.
In Kingfisher, FIIs lost money.
Okay.
FIIs also lose money. Okay, because they are also gambling. There's no risk-free investment at all. Even a bank, you can go put deposits, the bank can fail. It's happened in India. Regional banks in India have failed. Or you see a video of bank depositors standing outside and breaking news.
Waiting for the money to...
Yeah, and then the RBI will step in and tell some other bank to take over. And by the time you get your money, if you're lucky, news cycle will be over. We still do not know if all of them got there. We will have to go take a record list and call each one and say, did you get your money? Did you get your money? Then only you know the truth. You cannot rely on the media to tell you the news anymore because media will not talk about it anymore because they got other things to talk about.
Okay.
What's the next question?
Which part of the world is FIIs from?
Every part outside India they are from. They are from Sri Lanka.
And particularly if there are any countries like US, Singapore, Malaysia, Canada.
No.
No.
That's not like anyone. The majority of them are from, you can say, from Europe and US. But FIIs can be from any part of the world. Majority, yes, are from US and Europe because they're the world's largest concentration of wealth. Most of the money in the world is sitting in US and Europe.
Yeah.
But Middle East, a lot of people from Middle East are FIIs. A lot of people are sitting in Far East, Singapore or Japan can be FIIs. Okay. Mexico. Anyone who wants to invest money in India can find ways of getting money into India. They're all FIIs.
Okay.
So anyone who's outside India is an FII.
Yes.
Okay, what's the last question?
What is the difference between FII and FPI, foreign portfolio investors?
FII is foreign institutional investor. FPI is foreign portfolio investors. Yeah. The FII was only used until 2014 under SEBI. The FIIs are entities, okay? They're companies, like organizations established and incorporated outside India for the purpose of making investment in India. Okay? In 2014, SEBI introduced FPI that combined the category of institutional investor into a single category, portfolio investor. So just the technicality of the name change. It's the same thing, man.
Yes,
SEBI just changed the name.
That's
so instead of an institutional investor, it's a portfolio investor. Yeah. Okay. And the reason why they've done it is because FPIs include a broad range of investors such as mutual funds, investment trusts, pension funds, endowment trusts, insurance companies, hedge funds. So all these guys have also come under FPIs.
Okay.
Yeah. So insurance companies outside India, hedge funds outside India, investment trusts outside India, pension funds outside India who want to invest in India come as FPIs.
Okay.
So yeah, I think our first maiden venture with Arun in trying to do some podcasts, I think we're pretty successful. Do give us the comments down below how we can improve, how we can make it more engaging for you. We'll try and do that. Thanks for watching the podcast, guys, and we'll see you in the next one.
Thank you.